Now let's bring in Alan Knuckman. He's the Chief Market Strategist at Agora Financial. Alan, before we get to the morning trade, let's talk some vol. Let's talk markets that are trying to bounce a little bit this morning despite a soft Chicago PMI. What's up?
Well, we've seen a stock stall here, so it's been 2 weeks back-to-back negative 5-day action. So it's been a little bit of a break in this, this straight-up move that we've seen. Let's remember, it was not just last Thursday before, that the S&P got within just a couple of points of that all-time forever high. And even with all that's happened in the last 2 weeks, we've got the S&P and the Dow less than 2% from that top.
So you're impressed, Alan, or is the point here that we failed to break out? I'm trying to figure out which way you're going.
Well, I'm impressed, but I need to see some follow-through. I think we needed a little bit of a pullback here to stabilize, and we've seen that. So let's see with the next leg higher how the market reacts when we do that. So what I'm looking at is a couple of Dow dogs. The Dow is held around this 27,000 level. Let's see if it can make one more punch to the top.
All right, Alan, let's talk some Verizon. That's your morning trade. Tell me what you're looking at right now.
Well, this stock has had a move up. It's moved up about 6% here in the last 3 months. But even with that, it's only performed at half of what the Dow has done in 2019. So you're seeing a little momentum, and I want to see some follow through with that and a breakout there as well. We're right now at around 60.50, so about $1 away from the recent high. What we're looking for here is another push through that level and beyond as a stalled stock as well. The rest of the Dow, there's about a third of the stocks that haven't performed as well as the index itself, and this is in that bunch looking for a little bit of a rubber band snapback.
So, okay, Alan, when you're looking at a company that is sitting, as we just saw on the chart, right below the highs, we've seen this level that it's at right now as basically being a kind of ceiling for the stock over the past year.
Right.
Tell me how you go about putting on a trade when it's at such an important juncture.
Well, using an option, a limited risk option. So I can sleep well, and I'm looking at an in-the-money call option, a November 57.5 call.
Okay.
There's a gap down below at 57, so that should be an important support level to lean on. So the 57.5 call is $3 in the money, and it's trading for about $3.50. So there's only 50 cents a time. I've got 45 days. It's got an 80 delta, so it's going to act like the stock, a stock substitution play. So I have limited risk, and I also have earnings coming out here within that time frame as well, which I think could be the catalyst. Let's look at Verizon. Verizon's PE ratio is only 12, so it is a relatively cheap stock compared to the rest of the market.
All right, so you're going pretty deep in the money here, basically, to give yourself some buffer zone on Verizon.
Right, exactly. That's the idea. You want to have an option that's deep enough in the money so it acts like the underlying stock. So instead of buying 100 shares at $60 and tying up $6,000, I'm looking at buying an option that controls that same 100 shares, and it is only going to cost $350. So there's a big leverage difference there.
All right, Alan, nice. I like it. Interesting setup here. A good stock to watch right now, Verizon. Flirting with the breakout, Alan Knuckman, the Chief Market Strategist at Agora Financial. Thank you, Alan, joining us from the CBOE.